What's up, YouTube? It's Joe Catchpolia sitting on the couch, making some money investing in fractional real estate online, as usual. Today, we're looking at this post office property that was brought to Lofty. It just launched today well, actually yesterday because it's after midnight. But this is one of M11's properties. That's Josh. I've already reviewed a couple of them. I know I'm not making any friends with my comments about these. One of the things, and I think I have been accused of being a real estate slob. Yeah, that's in real life. I'm a slob, but snob in a couple of different places now. And I think that that is fair. I spent a lot of my career working with institutional properties, large office parks, shopping malls, really like stuff that pension funds buy and private equity groups and whatnot. So I mean, I have a little bit of that in me. Also like luxury hotels, all the sorts of stuff like that. But my personal properties have never been that amazing stuff that I've bought myself. The container home that I built was like really a mess. So I don't really feel like I'm a complete snob when it comes to real estate investing, but I think that if we're going to use the internet to buy properties all over the country that we're not going to get to directly control, um, we should be using it to get access to the absolute best properties out there, right? And so I think in the context of buying pieces of other people's deals, I want it to be a great deal, or why am I investing in someone else's deal versus just doing some on my own? And I get like, for some people maybe that's not an option and it's the only access to properties that we have. But I think that in general we should sort of demand from the platforms that they're bringing us deals that we actually would want to invest in. And I'm not saying, somebody might go through this deal and even watch my whole video about it and still decide that they want to invest in it. There's a lot of interesting stuff to talk about because it is a commercial property. We have a commercial appraisal. There's a commercial lease to look through some stuff. So there's some issues I haven't got to talk about on here before. Um, so I think it's going to be a fun one, but it is, there's also a lot of stuff, a lot of reasons why it's not a deal for me. Before I forget, please like and subscribe. Please, I have links in the description to this video to all the places where I currently invest in fractional real estate. Please do your own due diligence on those platforms and also on any properties on there, right? Just because I do or don't buy a certain property doesn't mean it's the right one for you. We're going to have much different goals, investment timelines, risk tolerance, all that. And so, I'm trying to share my knowledge of due diligence and what I'm looking at with these deals, but you want to do your own due diligence. Also, if you want to talk about these properties or my thoughts or your thoughts on them, feel free to jump in the Discord. There's a link to that Discord in the description to this video as well. Now that we got that out of the way, uh, and I said tickle that like button. I'm pretty sure I said that already. But you know, I- I'm looking for just really I would expect to, if I'm going to buy into somebody else's deals, I want them to be great deals, right? And so I just don't see that on this one, but I'm going to go through a couple of things that I think are pretty important. One, I mean, and I'm definitely a market snob, right? I want there to be a relatively large population and also growing. I already went through the greater area that this sits in. If you look at this on the map, we looked at Tiffin, I think the other day. Yeah, this place here. And so same general area, but where we are in even more of a rural market here. When I pulled this up, current population 371, and it's not even a big enough entry for them to have wanted to give us population over time to know if that's growing or not. Honestly, when you get to such a small population, it almost doesn't matter because if 20 people entered or exited, like I mean it's such a small amount, it's a drop in the bucket, right? But when we looked at the larger market, it is a shrinking market, and so that was something that was already worrisome to me. Um, when I zoom in, you see tons of land, right? So there are very few barriers to entry. Although on the plus side, and I didn't even tell you about the property yet. So it's a post office plus two apartments, 1,800 square feet. Uh, 0.44 acre lot, so nice big lot. Um, but the list price on this, oops, sorry, that they're bringing it to, total investment value 142,700, giving the price, the asset itself an underlying price of 140,000. Um, you know, so the good news is, even though there's a lot of land, like there's no barriers to entry, right? Like you could build something like this anywhere, tons of land available, but this is definitely below replacement cost, right? You couldn't, if you got the land for free, you're not going to be able to build this building for $140,000. And so, that is, I think, uh, having being below replacement cost is not the moat that a lot of brokers make it out to be, though, right? Like it is, although it does mean somebody else isn't going to come and build next to you and compete with you. It's also, to me, a red flag. Like, wait a minute, why is this so much cheaper than it would be, to build a new property? And if it's a little bit because there's some um, depreciation involved, it makes sense. But if it's going to cost me twice as much to build this, it's a little bit worrisome. Um, but yeah, so this is when I'm looking for a market, I'd like there to be like some barriers to entry, right? Some supply constraint. I mean, it is, I'm in San Antonio, so we don't have a huge amount of constraint, right? Other than as we get further and further from downtown, because we have a lot of land as well, but a lot of it's being built out, and and I'm also in this market not buying far outside of our loops, right? Which is where a lot of the new supply is able to go. But anyway, um, that's a little bit worrisome to me. The other thing is, so this is our property here. When I did our little walk around the street, this one next door looks really rough. I did put a message in the Discord asking, hey, um, does that still look like that or not? We've got an antique store nearby. Like it is, there's nothing wrong with that. I just pointing that out. But when you start to have properties in such disrepair, this is from a year ago. If that still looks like that, that's a little worrisome, right? When you get to a point where it's not economically feasible to continue to maintain properties, um, it's because there's not a lot of demand for those properties, right? And so that's worrisome to me. Okay, so let's see. What did I want to talk about with this though? Other than that, so $140,000 valuation. I'm not going to do a Zillow or any of those because I think they're not going to be very good because this is a mixed use property. It's a post office and two apartments. Um, Zillow's not just not well. You know what? I'm going to throw it in there real quick because I'm curious what it says, but it's really just not set up for that, right? And maybe if it thinks it's a realtor. Do we not even have Zillow pop up? Well, let's just see what Realtor says for it. Let's see if they give us a value. 127,000. Well, yeah, it's not that bad. But I mean, it's certainly not doing an income approach to value or anything like that. This is interesting to see though. It was sold last year, so it was bought by M1 last year, or his entity, for 103,000. Um, and so it's being sold for a very big profit, right? Per percentage wise, if you're selling it now for 140, I mean that's a huge, and that's what I was talking about last time. If you haven't read his book, I think you should. I think he's definitely knowledgeable about buying low and selling high, and I think it's a strategy that works great. But we're not taking advantage of that strategy by investing in these deals along with him, right? He's already making that profit, and then this is some place where, okay, if I'm happy with a 8.25% yield on a property in a shrinking market, that's already tiny, and the properties in quite a bit of in relatively poor shape as well, and I'm going to get into that. Well, then that's fine, but just because it was a great deal for him, don't expect it to be a similar deal for you, right? Because we are the exit liquidity in this situation, right? 103 to 140. Now, maybe he spent some money fixing up units. It's not super clear to me. I mean, I think the post office was already there. I'm pretty sure about that. But we'll look at the leases. But I wanted to dig into the inspections because there were a couple of things I haven't talked about before that popped up here. One, again, I mean, it's it's in a lot rougher shape than I would expect for a property that should be stabilized. But when I looked at it, if you look at the lease amounts, right, it's 140,000 for 3 units. That seems like it's got to be a great deal. But the rents are $316 a month for the post office, $400 a month for unit one, and $550 a month for unit three. So it's not bringing in very much money at all. It's a good amount relative to the purchase price. But one of the things that happens, when you have when you have a lot of units and they're very cheap units, you can't always just look at your cost relative to or your rents relative to the purchase price in total, because your minimum rent per unit, when it gets below a certain point, it becomes very difficult uh, to maintain a profitability. Like any small little maintenance expense can wipe you out for months. And I think that that's probably why we see a lot of the issues that we see in this property. Because when you're only making $400 a month for a unit, you can't spend very much to maintain that unit, right? And so that's one of the things, one of the reasons that so like, for example, here in San Antonio, in general, we won't buy anything that's less than $1,000 a unit, that, for rent. That's basically as cheap as you can get before. It just doesn't even make any sense. No matter what you pay for the building, you have certain fixed costs that, like, uh, are just going to eat into your $1,000 a month too much. Like, your unit turns are just going to be too expensive to continue to do that profitably, right? And so, um, but a couple of the issues I wanted to point out. So they've got knob and tube wiring here. 20 years ago, when I was buying my first properties, that sometimes I'd run into knob and tube wiring. I was a little less than 20 years ago when I was in New Jersey, but in New Jersey, it's sort of a lot of older properties, kind of like this market. And so you'd see them more. We almost never see them in Texas because we have a lot newer stock here. But even then, 20 years ago, if you saw this in a property, you either didn't buy it or you planned on completely replacing it with modern wiring. It's just a very old technology. I think that there's actually two steps in between that and what we're using today. And so it's not something that I have bought properties. I bought one property that had it, and just removed it immediately. I mean, I don't think it's conducive for having tenants, and so I was surprised to see that. Right, that's something I'd want to replace that in order for me to want to invest in this. Things like, okay, having missing a chimney cap, that could be recent, but probably isn't based on everything else. Lots of little, rotten fascia boards and whatnot. This one had the same sort of comments about the downspouts and gutters that I had made on the last one, and I really do think that this is causes a problem. And actually, we'll get into that a little bit further later. But all the issues with the steps. There's a lot of small things there. And obviously, I'm not going to cover everything. You want to go through this on your own. But those sorts of things that are like tenant safety issues, you just want to be overly on top of, right? And I understand why they're not, because you don't make enough money per unit to, if you replace this set of steps, okay, that's all your rent for one unit for the year, or for 6 months or something. I mean, it's really tough. I didn't even understand what this comment meant. I mean, they're telling you where it is, but they're saying there's action required. So I wasn't sure what this issue was. So that'd be something, if I were going to buy into this property, I'd want to ask, hey, what's going on there? All these spots with no GFCI, that's the ground fault circuit interrupters. You have them in your bathrooms and your kitchens. It's really a cheap thing to put in after the fact, right? And so when you have ones that don't work, or you just don't have them at all, again, it's something I just would never want to be missing those and have tenants in a unit. Um, there's an active leak. Another one, no GFCIs. Like, these are just like, this is something day one, you buy a property, you go through and you replace those. I mean, the home I'm sitting in right now, I did that with they didn't have those updated, and we did it as soon as we moved in. Um, and it's not, you might pay, if you're doing a bunch of them, you might pay 25 or $50 each for someone to go through and replace them all. Um, But again, I mean, then you're talking about 1 month's rent for one of these units. So, oh yes, this was taped down because something was broken, like the fan itself was broken. Okay, this is not the biggest deal. But again, you have no GFCI here, right next to a unit, or right next to water. Um, I don't know. To me, like I just would. This seems like a very basic thing. Like anybody I know who's a landlord would just fix this. So it is worrisome to me that this is an issue. At this point in time where it's been owned for a year. Sorry about that. I paused it to go and look and make sure this wasn't a year old inspection. I was wondering if it was from when he bought it. But no, this was a recent inspection. This has been owned for a year, and these are issues that weren't addressed. And so, my guess is that it's the standard operating procedure. They're not going to be. It's something though I'd ask about, right? Like, because one of the things, and I've seen lots of people mention this on the Discord. I don't want to be a slumlord, right? I don't want to be owning properties that are unsafe, or in a condition that there's a certain minimum level of living condition that I want to provide. And if we can't do it in a certain market, I mean, I go back and forth on that, right? Because I think if you're not willing to maintain it like this, or keep it with this lack of maintenance, I think you can't run it profitably, right? With such small rent per unit. And so I think it's a tough spot to be in if you want to be in that market and providing housing. Maybe this is the best you can do, but for me, it's just not. It's not something I'd want to provide. And so, um, basically, I would want to just get this a lot cheaper so that there's the ability to spend that money and still make a profit on it, right? And so here, they mentioned the basement walls are damp. And they even mentioned it here, right? Maybe if we can correct the downspouts outside, that will help this issue. Now, is it going to fix the whole thing? Probably not. They're saying let's add a dehumidifier and whatnot. But like the downspouts and gutters are like the easiest way to help protect your foundation. I know I mentioned that in the last video, and so I thought it was kind of funny that they actually mentioned it right in this inspection report. Have a lot of these things. The sump pump was just connected with an extension cord. Um, this kind of stuff. I mean, I'm very surprised that somebody with the level of experience that I believe M1 has properties that he's maintaining in this manner. I know I talked a little bit about, and if you read his book, he talks quite a bit about short-term holds. Buying low, selling, getting it rented, selling it high, uh, within a year or so. And so, I think when you have that shorter term outlook, you're often not going to fix a lot of these things because it's like, oh, it's been good up till now. It's going to last me a year, and then it is somebody else's problem. But for me, like, I mean, this is just, again, these are the sorts of things that I don't want to have in a unit where I have tenants. Yeah, exposed wires. So, for example, when you buy properties on Lofty, not on Lofty, on Mogul, in every single inspection, if they get this action required thing, they're always going to address that, and they either ask for a credit, right, depending on, or ask the seller to fix it. But like anytime I have one of these actions required, sometimes you see it labeled differently in different reports. But those aren't like, oh, these aren't nitpicky things. These are things that like you really should just address. If you're going to rent that out to a human being that's going to live there. Those are all the things I wanted to point out in that. Again, it's just not. If there was a huge yield, and maybe we had the possibility to buy this and then spend some of that excess income um, addressing these issues over time, I could see that uh, being useful. But okay, so the other thing, um, I'm not going to talk too much about the value because the 140, this is a page from the appraisal. I would encourage you. I'm going to try to not make this video too long, and there's a couple other things I want to get to. But I would encourage you to read through the whole commercial appraisal. It's 59 pages. There's a ton of great info about the market and about, I always love it when we do these commercial ones because there's just lots of info. But so this is, um, they're going to do the income approach to value. They value it at like a 9.5 cap. And so, this is how they come up with that value. And so, okay, let's look at, they've got your base rent. Okay, fine. Um, and I didn't even verify that that's the in-place rents. I should have done that. But assuming that's right, I mean, that, I didn't dig into those numbers that much because it is like, I think for me, this was an easy decision, but regardless, you want to verify that. And then, okay, they do have a vacancy collection loss. I'm very happy that they have that. I think that's something you should have with every single property. But then the only other expenses they have is taxes, insurance, and water and sewer. Total operating expenses. And so they're operating this at they're saying that this is like a 13 point something operating expense ratio. Which, if this were a triple net property, that might make sense. But we're going to get into the lease in a minute, and it doesn't. It's not. I mean, the apartments definitely aren't, and it doesn't look like the post office actually is either when I look at the lease. And so, um, when you're typically buying apartments, a very rough rule of thumb you can use is your operating expense ratio is going to be about 50%, meaning if you get $18,000 a month a rent, you're going to get about $9,000. I mean, not a month, a year in rent. You're going to get about $9,000 a month in profit before your debt service, right? And so that should be your taxes, insurance, your property management. There's no property management built into this. Your vacancy collection loss, your repairs and maintenance, but not having any repairs and maintenance in this. And then using a cap rate, applying a cap rate to this number makes it seem grossly overpriced to me. Like I couldn't believe when I looked at this, um, that that that's the NOI that they were capitalizing, right? And like this is perfectly fine. I think a 9.5 cap, I think that makes perfect sense. But I just was really surprised that, and let me make sure that that's actually what they did. Let's break this out. Okay, let's see. So 14,756 divided by 0.095, 155,000. Um, did they not use 0.95? Oh, they used 0.94 or 94. Oh, and then they had a high one and a low one, and then yeah, so they did. They came up with this 155,000. But then they also did a sales comparable approach, which was 130, and then they picked a number in the middle, which was the 140 that we see as their reconciled value. Um, so I mean that operating expense ratio, yeah, it's 13.7%, or it just is crazy. I've just never seen that. I've never seen that on apartments. And like I said, I don't know if they were like, oh, it's a post office, we're going to do this as triple net. I mean, but even then, so we don't see, when you have triple net, if you don't know what that means, typically that means the lease is, they make the lease payment, and then the tenant is responsible for paying you their portion of the taxes. That's one of the ends. The insurance, that's the second end, and their portion of the common area maintenance. That's the third end, right? But we don't see any expense reimbursements in here showing that. And I think when I look at the lease, I don't see that either. And when I look here, I was like, well, maybe they were just netting it out of the cost. But so I actually looked the property up, in the public records, and looked at what the tax was, and it looks like it's exactly, what they were doing here, right? Is it exactly 502? Oh, this says 52030. That's interesting. Um, oh, but maybe it's actually lower this year than last year. That annual tax, or it's higher because it was 430 before. But so it's in that same ballpark. It's not as if they're netting out some of this, and then the insurance, especially being a round number. Um, so it doesn't look like, based on the financials, that it's a triple net. But so I wanted to look in the lease too, and so they have the residential leases, and you always want to check those when they're provided. But then, the post office lease, I used to work at a place where we did some financing for properties that had postal leases in them. So I've looked at these a little bit before. I'm certainly, if you remember, I retired my law license quite a while ago, so none of this is legal advice. Just looking for some of the business points in here. But so I'm somewhat familiar with these, although it doesn't look exactly like I remember it, and it's probably because my experience is kind of old. But so a couple of things. the rental amount. They're just saying, okay, this is the rental amount, and you divide that by 12, and that's how you get that lease rate. But usually, if you have a triple net lease, you'll also have your, a clause that says these things are paid back in this percentage, right? You have your CAM clause, you have your insurance clause, you have your um, property taxes clause, and I didn't see any of those, and maybe I just didn't read it carefully. So you want to read through that and figure out if that's the case. A couple other things I noticed. So uh, this renewal, so the let's see, effective date, expiration date, renewal options, consecutive terms, and the following annual rental. So this is the renewal, right? But so that's the renewal starts 2022. So where was our actually, yeah, our term ended September 30th, 2022, and there should be a renewal. Typically, you'll have a renewal letter attached to a lease if it's been renewed, and that's going to be executed. I didn't see that, right? Something exercising their renewal option. Obviously, we're here years later, so I'm assuming it was done. But the reason it's important to get that is sometimes they negotiate that renewal option, right? Like, because this means they had the option to extend it, but it doesn't mean that that's exactly what they took, right? Because sometimes they'll negotiate a better deal at renewal. And so I'd like to see that renewal and, what the terms were, or if they just had a letter that just said, no, this is renewed at the current rate, then that's great too, right? But I would like to see that. Um, this is one of the things I wanted to point out. They have a termination option where the post office can terminate this lease anytime with 30 days notice. Uh, and I think you get that a lot with government leases, but it is, a lot of people are like, oh, well, you have a government lease, that's like guaranteed money. Uh, but if you've paid attention to the news over the last several years, like this is kind of an older article. Hundreds of post offices and other facilities consolidating operations and closing. There's another one. This one was a little bit more recent, where there was 3,700 mostly rural post offices potential closure. Um, you know, Over time, we've seen more and more post offices close, and in exactly the type of situation. I mean, you have a market here where you've got 370 people in that town, and then presumably some people are coming from outside of the town, but you have bigger towns nearby where people might end up being forced to go if they close this. So, um, if they do decide to close, you only get 30 days notice. Uh, or they only have to give you 30 days notice, although usually there'll be an announcement. You'll know about it sooner. I'm going to just start closing some tabs so my computer can relax a little bit here. Um, oh, wait a minute. Was this, what is this? No, this was the original executed. And then, oh, and so, you can see their leases are pretty simple. And then they tell you, like, okay, which riders they have. Um, and so again, they have the landlord responsibility one, and I wanted to show you that because typically when you think it's something's triple net, you're not. And I don't know because it doesn't say it here. I wonder where I saw somewhere I saw it written that this was a triple net one. So I want to point out that it's not really. And a lot of people just assume certain ones are right, but they like certain tenants are always going to be, but it depends on what their lease says, right? Um, but oh, clearly, so the lease does call for the repairs and maintenance to be done by the landlord. And one of the things that I thought was interesting, like if you look at this, the landlord has to paint the whole interior, every previously painted surface, they at the start of the lease, and at least once every 5 years during the continuation of the lease, right? And so, um, there's this ongoing cost of maintaining this lease. And if you think about how little you're getting paid on this property, um, $316 a month. And if I've got to go in there and I've got to move all their furniture and where did I go with that? I've got to, be responsible for all of that. It just seems like that's going to eat up several months of, unless it's like, one of the things that happens sometimes in these markets that have really cheap rents is that you also have cheap labor. Um, but I feel like that happens less and less as you start to have, um, where I grew up in Maine is a very small town, rural place, but it got very expensive because a lot of the young people just move out. And so the physical labor to do those sorts of things, it's hard to find them, and it's not cheap. So again, I mean, there's those. It goes into all the things that need to be maintained. But then the other thing that worried me about this is there's an underground storage tanks rider, and so these maintenance riders they pick and choose which ones to add, and so this made me wonder, like, is there an underground storage tank on this property? And I realized that in the Dropbox we don't have a phase one, at least not that I saw, and so again, I only spend so much time on these, so I could be missing them. Um, oh wait, what do we have here? I think that's just the yeah, that's just the invoice for the appraisal. Um, And so without the phase one, that's what would normally, alert us to the fact that there is an underground storage tank or there are these different things. But so having this rider in the post office lease, they typically don't just add these for no reason. So it made me wonder, like, was there an underground storage tank here? If there is, that's something that we need to maintain. It would be a reason to have a phase one, and probably if you did a phase one, they might ask you to do a phase two if there is a tank, because they're going to want to see check the soil and see if it leaked or not. So I don't know, that little addition worried me as well. Like I couldn't figure out. It didn't strike me as a property that I'd even worry about that. Um, but they have that in the lease, and I kind of wondered, like, well, maybe do they use this? Because usually you think of when you see the USTs, you think of like gas stations and those types of properties. But then maybe it made me start to wonder, like, oh, well, are they using this also just if you have some sort of, sewer tank that you've got back there? Or, maybe they're adding this rider just for that. But I'd really like to know, like, what's the reasoning behind this? Um, and specifically, did we do a phase one? And if not, why not? Because it is a commercial property. Maybe it's just too expensive because of how cheap the property is, right? Like, I mean, if it's, uh, you know, I don't know. It just very much, stuff like that. If I have unanswered questions, I'm never going to want to invest in something until I know where's this coming from, right? And so it's a situation where you can have and the reason underground storage tanks are so concerning is if you have one on your property and it's not properly maintained and it leaks, you can have just millions of dollars in liability from neighboring properties and whatnot. And so, if you're buying a property that has one, most of the time I'm just avoiding those, right? Like there's especially, unless there was if this were an amazing deal and I had to take a little bit of environmental risk like that, maybe I would do it. But it's really hard to understand, why I would otherwise. Now, one of the things, and I don't know if I got into this before or not, one of the things that I think could change my mind about this is there some additional plan, right? Because we have a property um, that is it's got a big piece of land, right? Like it's not it's not just it's almost half an acre, right? I mean, we have this is the building itself, but I think if you look at the parcel, it really goes like, quite a bit bigger. And also, when I looked up in the public records, it looks like M1 owns this property next to it as well. And so, okay, is there some future plan to do something with this land that like adds a little bit of additional value to this deal? Like I think it's possible. Um, I think it's pretty unlikely just because of how much there's just so much vacant land in the market. Like, I mean, I think it's possible, but I don't necessarily think it adds a ton of value. But it made me wonder, like, is there something else going on, right? Is there something else that's making this compelling, or is it, well, people just want to be able to say they own a post office, right? I mean, that happens a lot in real estate. Or a lot of times, like these properties in a lot of small towns, it's just like one person just starts buying up everything and they get it for a great deal and at the right price. If you bought this for $103,000 last year and you're getting to cash out at 140, well, yeah, this is a fantastic deal, right? But if I'm buying it at 140 and my yield is 8.27%, and I don't see some reason that I'm going to sell it for significantly more in the future. Um, then it gets really hard. Right now, maybe, another thing that could be the case and that we're just not being told, maybe these lease rates are exceptionally low, right? Like, I mean, that's one of the things we could dig into lease rates, but I think in the appraisal there would have been a mention of that, and I didn't notice that. Um, I also noticed one of these leases is relatively new, right? I think M1 did it, so I don't think it would be way under market if he just did it. But let's see. When was this one signed? Yeah, this just started in December, right? So to say that this one's under market, I think would be really tough. And that is the largest one, right? That's unit three, which is the two or three bedroom, one bath apartment that I think takes up the whole upstairs. Um, oh, and then I just actually want to just look through the pictures. So like, um, oh yeah, the other thing is if that post office moves out, like, what are you using that space for, right? Like, is there any, it's tough to know. I think you just have to turn it into a studio or something. But yeah, this is the other thing I wanted to just, when I'm just looking at the pictures, like, um, they're very simple units, but like, think about, okay, if I have to replace this stove, we're talking about at least a full month's rent, right? And maybe two. Uh, they're if you look at like just the quality of the finishes and whatnot, um, you know, uh, uh, it does look like it's clean and is they're not other than the stuff in the inspection, not anything that jumps out as being too hazardous, but it is um, it's obvious that there's not the capital to put into improvements for the property. And it's because of, this ends up happening when you just have very low lease rates, right? Like the lease itself, even though the property was cheap, the lease rate itself isn't enough to keep the units well maintained and still have something left over for you as the owner. So I just want to point, into some of the, I mean, like these look like they're probably original cabinets or cabinets from, a very long time ago. uh that thing, that island, I think looks like, I don't know. It looks like I built it. I mean, I had a company where I would get broken stuff on the side of the road and build furniture for a little while. And I could build this. And I just, that was basically a failed company. I'm not very good at it. And so that's kind of my comment about this, right? Like, I mean, it's just interesting. I don't know. It's tough for me. And again, like maybe that's the real estate or the deal snob in me coming out, but it is with the risks involved as far as like, the market, not understanding all of the maintenance issues that are, appear, the electrical stuff especially, but also, some issues, but potential future issues with the foundation where you have the basement in the condition that it's in. And then the possibility that there's a UST, although I don't know, I don't understand, needing to find that out. Um, if it is, having to maintain, not having any line items for repairs and maintenance in the appraisal that gave you the value for it. I mean, all those things like just really make me worry. So that is not a deal, like I said, and I think you could get this from the very beginning. It's not one that I would purchase. If you are thinking about buying some of this, or if you have already, I'm really curious what attracted you to it, right? It is a nice metal roof, right? I like metal roofs. That's a good thing. Is it that you thought, hey, I've got a post office and that tenant's never going away, that's guaranteed income? Is it that you like the idea of helping to keep small towns going, right? I mean, I don't like, I think that there are some people that invest in real estate with those sorts of ideas. Um, like if you don't buy this and maintain it, nobody's going to. Uh, there's some people, that's a legitimate reason. There's definitely people that do that. Those are people typically that have more money than I do, and so they're trying to do something like that. Um, do you think that there's just upsides in the leases? What is it? Do you think there's some other plan that I just am not privy to do something with the excess land? All those things. I'm curious, what if you are buying into this, what are the reasons? Feel free to jump in the Discord and let me know, or put a comment to this video. Um, because like I said, I mean, I'm always happy to figure out when I'm wrong about something, and if there's some compelling reason to buy this one, I'd be interested because you know what? I'd like to be able to tell people I own a post office. Um, like I fall for that same kind of idea too. But at the end of the day, I'm on this platform to make money, right? And so if I can't figure out, and so basically, yes, 8.8 and a quarter yield, basically, but is that our true yield? Well, that's on a perfect month when you have, well, let's look at the financials again to make sure. But yeah, it's a perfect month when you have, oh, was that not even, let's look at those rents. Because I told you, I thought that I hadn't even checked the totals when they add them up, right? Okay, so let's see. 316 plus 400 plus 550 times 12. Oh yeah. So that 18,000 wasn't even actually looking at our rents. Those were market rents. So that appraisal, I mean that I hate it when the income approach and the appraisal is using, and you do base it off of your market rates, but I don't know why they think they know what the rate of this should be more than the actual in place rate. Um, I don't know, maybe 2 years from now you do get to bump that up a little bit, the post office lease, if they decide to stay. But so yeah, let's go back to that financials tab and look at that. So I don't even know. This ends up being a little bit higher. But yeah, they have the homeowners insurance. They've got the property taxes, and this actually matches up with what we saw in the public records better than what was in the appraisal. I think the appraisal was inflating it because oftentimes you do that for the next year, right? If it's forward looking. But here we got this big property management fee, right, that we didn't have in the appraisal. You've got the Dow fees. I think that's separate because that doesn't affect the value of the property. But yeah, they have, there's no repairs and maintenance. There's no vacancy. So this is like a perfect month. You get this amount. If you replace a stove, you're I mean, you're getting like nothing. Like that's, I mean, so okay. This is their annual cash flow, right? 11,794 9 divided by 12. So $982. Yes, you can get a cheaper one for $300 or $400 or something, so you might not be completely out for the month, but I mean it cuts it in half. Just something as simple as that, right? If you do end up with an issue with the foundation or one of the more major items, or you decide you're going to spend the money and replace all the knob and tube wiring. I mean, you're out for half a year's cash flow or something, and that's what makes the really low rent per unit deals extremely difficult to manage in a profitable manner. Um, you have a $400 security deposit. If that tenant trashes that place on the way out and you're never able to collect from them, all you've got is $400. I mean, good luck just replacing the carpet for that amount, right? I mean, there's because it's a decent sized property. Like the upstairs unit's probably 900 square feet if it's 1820 total. And so it's not like these are little tiny units so that maintaining them shouldn't cost very much. So it's just really tough. So I think that's one of the biggest issues that, and I run into that. There's a whole bunch of these here in San Antonio that are in certain parts of town where your rents are just so low that there's not any way to buy those properties, properly maintain them, and rent them out at any sort of profit, and really without losing money. So I don't know. I think that's really everything I want to talk about with this. I am curious, if you are interested in this one, I'd like to hear about why. Um, and hopefully, like, I mean, I know this is the second one in a row now where I'm looking at some of these properties that M1 is putting out. Oh, sorry about that. I didn't want to make you listen to that whole Amber Alert that was going off. But yeah, hopefully, like I said, I mean, I hope we can still all be friends. We can disagree on what's a good investment property and what's not, and and still be cordial. I think nobody was too mean to me after the last one, but I can imagine if we have a bunch of these, I really don't want to be butting heads with people, but at the same time, I don't want to sugarcoat my thoughts on any of these properties. I think I was a little bit too nice early on with keeping my thoughts about Yom to myself. And I don't mean to compare the two, like I think this is a similar situation, but it just made me, really want to commit to, I'm just going to be, as upfront as possible without being mean about every deal that I see on here in every situation. because I think that especially, I think one of the things is seeing that Josh is very successful. He does deals, does a lot of, manages a lot of properties, makes a lot of money. It's easy, I think, for somebody that's kind of inexperienced to be like, "Ooh, I want to buy his deals," right? I know he's successful. I want to buy the deals that he's selling. And I think that the real danger to that is that, well, these are the ones he's selling, right? He might be maintaining a piece of it, but he's really made his money in the delta between 100 and 140, or 103 that he purchased it for, and 140, right? Like, this is a significant, if I were analyzing this deal at 103,000, that yield would look significantly better. Potential upside, would there be, it would be more so, right? And so, I think that that's just something to keep in mind, right? I can understand why somebody might want to tie themselves, kind of ride his coattails, but just understand, like, I think the way to do that is maybe get into his fund. It says he manages a fund that's had these fantastic returns. And, looking at the deals he's put out so far, I 100% believe it, because, they've been ones that he's bought pretty cheap and then sold for a good profit, or is listing for a good profit on Lofty, right? So if he's able to do those same kind of deals in real life, buy those. What he's apparently really good at is buying them low, right? Making that profit on the buy. Completely legitimate strategy, but it doesn't necessarily mean that's who we want to buy from. Provide the exit liquidity to, right? I mean, that's my thought. Like, I just, um, the general overall, like, disrepair of this property and the others, already, like, I mean, I get it, because I go back and forth, right? You can tell I'm conflicted on this, because it is, like, if your rents are just so low, there's only so much you can do to maintain a property. And so you just have to decide, like, am I going to be the one that's doing that or not, and how much risk am I going to take on to be the one that is providing that? I don't know. Anyway, I think I've gone, covered that point like 17 times now. So we're going to be done for the day. If you haven't already, just poke the like button, just hit it. Apparently there's a bell I'm supposed to tell you about too. So if you do the bell, that's even cooler. Um, I think that's really everything that I have for today. So until next time, I'm going to keep making mistakes so that you don't have to.